Greeting to you, DA traders, and you're watching the Daily Market Review with me, financial analyst of Grand Capital Company, Sergey Lin. And our daily heading is dedicated, as traditional, to the technical analysis of Forex majors. And let's start our review from the first pair. It will be, let's open the graphs, it will be intraday analysis of Euro and US dollar. What I have here. Thursday's strong recovery from 1.3069 puts pressure on resistance at 1.3166. A Euro bullish symmetrical triangle is near completion on the 60-minute chart, and an upside resolution is expected to challenge key resistance at 1.3213 and 16. However, an enforced push through 1.3216 is not expected at this stage, despite the creation of upside targets at 1.3247 and 1.3274. Loss of 1.3101 would bring the 1.3057 and 69 lows back into the picture, leaving the week's low at 1.302994 vulnerable. Weekly chart of Euro and US dollar trend is bearish. Next pair, intraday analysis of US dollar and Japanese yen. Becomes range bound between 81.39 and 81.74 on the 60-minute chart, as a pivotal resistance at 81.85 looms overhead. Weakness is expected to be cushioned above Thursday's low at 81.17, and US dollar bulls are poised to launch a fresh attack on the 81.74 and 81.85 area. The 50% Fibonacci retracement level of the 50 Fibonacci retracement level of the 84.18 and 80.29 bear wave flies above 81.85 and 82.23. Only a move below 81.19 would concern US dollar bulls, exposing 81.00 and 80.75. Weekly chart of US dollar and Japanese yen trend is bearish. Next pair, intraday analysis of Great Britain pounds and US dollar. Actually, what I can say about this pair. The push into fresh 5-month highs leaves Thursday's peak at 1.6077 vulnerable. Further, Great Britain pounds gains are expected to meet a short-term 1.618 Fibonacci extension target at 1.6108. And the main objective is to reach the October 2011 lower reaction high at 1.6167. Downside risk is limited to 1.5945, which is protected by 1.6001 and 1.5970. Weekly chart of Great Britain pound and US dollar trend is bullish. Next pair, intraday analysis of US dollar and Swiss franc. Support at 0.9120 and 25 is likely to be broken, as the weak setback from 0.9251 has scope to extend. The April 12 higher low and 0.9091 will come into view on a push below 0.9120, and the support line of an 8-week US dollar bear pennant continuation pattern at 0.9040 would become vulnerable. Upside risk is limited to the 0.9170 area, protecting 0.9210. Weekly chart of US dollar and Swiss franc trend is range. Next pair, intraday analysis of Australian dollar and US dollar. Feel the weakness towards 1.0271 is threatened, as the week's low at 1.0305 comes under pressure. The completion of the bear flag on the 60-minute chart has met a downside target, but the important April 11 reaction low at 1.03 1.0226 remains vulnerable. Keeping support at 1.0305 intact, combined with the break above 1.0395 is required to lift the tone. Opening the April 15 reaction high at 1.0455. Weekly chart of Australian dollar and US dollar trend is bearish. That's all, my dear traders, for today. It was me, financial analyst of Grand Capital Company, Sergey Leon. For more additional analytic information, you can visit our website. It's www.grandcapital.net. I wish you the fair trends and good luck.